Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 27th of March. I'm Daniel Lam, your host for the podcast. Well, let us expand upon last Thursday's podcast. The most prominent moves have been 1. The weakening US dollar, and 2. The sharp rise in the Hang Seng Index. I'm sure the key questions in your mind are A. What has been driving them? And B. How are they likely to fare going forward? So first of all, let's talk about the US dollar. The DXY index has been trending lower since the beginning of March, but the fall has accelerated post-FOMC. Well, this is because the markets is pricing in Fed rate cuts later this year, despite what Powell said in the press conference. The key factor would be the issues surrounding the US regional banks. Yellen said that she was not considering blanket insurance for all US bank deposits, which further impaired sentiment in the US regional banks, not to mention pressure that these banks face in areas such as commercial real estate. Market participants believe that the Fed would need to cut rates later this year in order to shore up the economy. Hence, the dollar had been falling since the start of the issues surrounding the US regional banks. And it seems that the dollar is likely to weaken further, with heavy resistance at 105 for the DXY index. Now, weaker US dollar is likely to benefit Asia ex-Japan equities. We spoke about how there had been buying support in the Hang Seng Index around 19,000. And indeed, the index broke above the first resistance at 19,792 post-FOMC. Of course, it's also helped by some strong earnings from important mega large-cap companies in the index. So it appears that in the short term, the Hang Seng Index may be able to challenge the next resistance at 21,000. At the National People's Congress, there has been a pro-business message, such as the promotion of private entrepreneurship, reaffirming opening up, and the improving policy clarity. Thus, we remain positive on Chinese equities, particularly those areas related to consumption. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.